What's up? What's up? What's up, guys? Somebody DM'd me. I just want to check in with you guys and wanted to show you real quick. I know I don't really make a lot of videos, but I thought about it today when I saw this message and the guy say, "Hey man, I only got like $100 and I really want to start trading and learning how to trade." I'm going to be starting off with like a $500 account or maybe $100 account. And so I said, well, let me show you what you can do. We happen to be working on like a little account right here. This is a little $500 account. It is now anyway. It's, as you can see, this is a month. That's 3 months. As you can see how it's slowly building up over time. Okay. And also, you can see the buying power here, which I like to, show y'all. So that's that. All right. So $100 in buying power, right? And you can see the trajectory of this in 3 months. It's going up, and I'm going to show you how in 3 months it goes up. Okay. All right. So here it is. So here's an example of trading options, and as you can see, I do have some pending orders sitting up here, but I'm going to show you guys something. So first of all, when you trade options, it's always good practice to trade something that you wouldn't mind having if you ever had to own it. Regardless of whether you're going to get in or get out or whatever, anything can happen. So I'm going to show you what I wouldn't mind having is Google, right? So I'm going to go ahead and look up Google, but the new one, what I like to call the new Google. I think it's alphabet class A. Let's see if it's, yeah, that's the one. So anyway, so check that out, right? Okay, so we see Google is about 128.44 going right now as of August the 3rd, Friday, right? So you just got paid. You got $100 you want to put in your account, and you want to see how much you can make. Cool. That's 1 week. This is what nothing. So you take Google, you see what has it been doing. Okay, so in the last month, Google went up $7. Well, $7. That's not bad. So you can see the trajectory in the last 3 months. 3 months up $22 and $65 overall in the past 5 years. So, and you can see, and a good practice is to just watch what it's doing. You see that? Boom, boom. Okay. So you got a touch right here. You got a touch right here. So you can be looking for it to hit right about there. Okay. So what is that? So let's take a look. What's this area right here? You can see that area is about 150. Okay. So this is how we're gonna play this. We go to our trade options side. And since this is what I like to trade is weekly options, because look, you want to see your money grow over week after week after week, and this kind of gets you excited and gets you charged up to keep on trading options. So what I'm going to do is, instead of going with today, I'm going to go with the August 11th, which is a week from now. Now keep in mind, I'm going to give you a key pointer that a lot of people don't find out early. It's always good to sell options on Friday. That's my opinion. Take it or leave it. It's good to sell options before the weekend. The reason why is because you get 2 days free time decay. That's the way I rationalize it. So here you go. So let's just go with August 11th, okay? So what we're going to first do is, remember what we said, it was about 148 was what it was moving, what is high, right? So here's 145, 46, 47, 48. Now, 148, let's say we're going to sell. If you watch what I'm doing, we're going to sell. I'm going to sell a call, okay? So let's sell a call. And now we gotta sell a call, or we gotta make some money. Because remember, when we sell, people pay us. You get paid to sell. Now, but we want to make some money. So now you're caught in limbo. Now, but also take a look. Remember, chances of profit. So now remember, it was about 148. We figured it reached the last time. It probably won't reach that right away. So let's just look at the chance of profits, okay? So chance of profit is going down. This chance of profit is going down the closer we get to the current price, okay? Because remember, we're selling, so they're saying the chance of you getting out of there without losing money goes down the closer you get to the current price, okay? So let's go on down. Let's go on down, and let's see. What about? There's one. 79% chance profit. Okay, 79% chance of profit. That's not a bad thing. And you can see I have, I'm just showing you guys this example. Let's sell the call right here at 135, just for this example. And again, guys, you don't have to use this exact example, or you probably shouldn't unless you know what you're doing, but just get an idea. So we're selling that call at 135 with a chance of profit of 89%. Okay, and keep in mind, this is going to expire a week from now, next Friday. So this is going to be our check. We're thinking about making our little check for the next week. Okay. All right. So now we sold that call. That means we're telling somebody we'd be willing to buy it from you. Now, if we just did it one side like this, we'd have to buy. We had to have enough collateral to be able to pay 135 times $100, not times 100 shares. But we're not going to do that. We're going to do a spread. So check it out. What we're going to do is we're going to turn around and buy the call above it. So the best thing I do is I say, just imagine one minus the other. 31 minus 23. And that gives you an idea of what kind of profit this could be. Okay? So that's what kind of numbers you're really looking at. So the question is, how much is that? That's a credit. That's going to be called a call. Why? Because we're doing two calls. Credit, because we're about to get paid for it. Spread, because we're using two different options. So that's that. So as you can see, this is telling us what's going to happen. This is our call credit spread. We're getting the credit for it. What's our credit? $7. And when does it expire? August 11th. What did we do? We bought one at $36 to protect our ass, and then we sold one at $35 to get a profit, to get paid. Okay. What we left with is $7 to $8. Okay. Here's a profit and loss analysis according to Robinhood. We're in profit as long as we stay here. If it breaks through the 135, then we start losing money. What's our max loss? $92. Not really a good risk to reward, to be honest with you. Not really a good risk to reward at all. So I don't know if I'm going to even take that trade, because at the very least, I got to be 50-50. It got to be maximum profit, got to be, usually I like it to be close to each other. So, all right, so I don't like when it's too far apart, where I got way more chance of losing way more money than I could profit. The only difference is in this is the reason why is because it's so little chance for you to actually lose that $8. Okay, that's the reason why they're saying that, because the way this is set up is very slim chance that you won't make the $8. You see, if you look at Google price, where it's got to go way up to third. We got to go way over here. So just for it to get to for you to get to $0, for your $8 to get 8 up, you got to go from here to here to get to 0. Now, if I see that $8 get to about 4, I'm gone. But like I said, so the question is, what are we gonna do? Are we gonna take it like that, or are we gonna leave it? Personally, I think it's not enough money for me. I want to do something bigger. So let's clear that out, and let's go. I'll do another example. How about we sell a call? We about to take a big chance. Let's take some chance. See how much. We sell a call right here, and we'll buy one right here. So as you can see, call credit spread. Look at total credit, $30. Profit and loss. As you can see, max profit. See, that's a little bit better. But as you can see, it's a much better chance that they can get me. Because 131, I think it was a little bit higher, 133 on the last one. So it's a bigger chance that it could reach to 131, which is the break even, which is where you see right here, telling you that if it will go to 131, all the profit that you just made, which is what you're getting paid, $32 to get into this trade, is going to be zero, and then you're going to go into loss. It's going down, 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 like Mary J say. Okay, that's what you do not want. And I would suggest that you keep an eye on all of your options, so that way if you start losing about 25% of your option, get out. So it's your rule to make. Some people get out at 50, some people get out. My rule is like 25%. If I lose 25%, 30%, I'm gone. There's nothing else to talk about. Okay? So I like this trade. $32. I got a chance of losing $68. I kind of like this trade. Total credit. Let's play it. Let's see what they're going to do. Minimum credit. I'm about to get paid $32. And then a minimum credit at 30, 33, 34, whatever. Let's see what it does. See if it'll give me the money. Pending, placed. I don't like to play around too long. I'm going to replace the order. I could let it sit. Sometimes if you have patience, you could let it sit, but I'm not really tripping. If I make $30 off $100, then I'm really not tripping. So that's 1/3, 30% profit. You gotta think about that, man. On $1,000, if you can make 300, are you stupid? You know what I'm saying? Come on, man. Make sense out of it now. Shit. Literally, if I did this times 10, it'd be like putting $1,000 on the line to make $300 up front now. So just think about it, Okay, so here it is. It looks like they kind of parlaying, but you know what? I'm going to play them close so I can make this trade go through. Let's see what happens. I don't even know how much. I didn't double check to see how much money. Trade pending and filled. You see that? It's collateral is $100. Contract is on. We got credited already $32. I had to put up $100. Minimum credit was already $32. So you see what I'm saying? This is why I say that as a person with a small account, it's possible for you to start practicing trading options and making profit. So you think about that. Again, put a zero on that collateral and make it $1,000. So if you put up a G ball, that minimum credit that you would be getting today would be $320. You see what I'm saying? So you mean tell me if you did that every week on this kind of stock like Google right here, which lets you do it every week, you mean tell me that you couldn't change your life? Of course you could, man. Of course you could. So just think about that, man. So I'm Mr. Cozmik, man. This is the Cozmik Training Academy, man. Shooting when responding to y'all DMs. Anytime y'all ask me questions, put them on on YouTube, or you can go to the Instagram and send me a message, or just respond to any of my little videos or whatever, man. Like and subscribe if you like stocks, trading options, etc., etc. If you're into business, if you're into travel, check me out. This is where we at. This is what we do. You can see my other channels too. Mr. Cozmik, all that stuff, man. That's what we do, bro. Hey, appreciate y'all. Good luck and happy trading, man. And have a great weekend. Later, man.